Yeah, this is Praveen. Today I'm going to discuss about foreign currency revaluation. I'm not going to the SAP. Just I want to give a brief introduction and how we will do in SAP. Foreign currency revaluation, a month-ending activity. And it is prepared every month last date. Generally, it is prepared when companies purchase or sold goods in other countries. Is foreign currency in which is in foreign currency. So it is prepared when companies purchased or sold goods from another countries. So when we post an entry in SAP, we entered in foreign currency. So that's why we need to prepare foreign currency revaluation every month, because currency fluctuates, keeps on fluctuating every day. So to show the accurate value of accounts, paid month ending date. For doing foreign currency revaluation, to do some configuration regarding this. First, we need to define define our accounting principles. Indian GAAP or IAS accounting standards, etc. Then we need to define valuation methods and valuation areas. Valuation methods and valuation areas.
Hello, Praveen.
Because valuation method is a method because on what basis and on what currency we are evaluating. So that's why it is need to define valuation methods and valuation areas, and these both are interlinked to each other. After that, accounting principle are to be assigned to a leading ledger. Leading ledger means it is a default ledger, because on leading ledger basis we are preparing books of accounts. So it is a default ledger. Leading and non-leading ledger is for reporting purpose. So we are not talking about non-leading ledger now. So we are talking about only leading ledger today, and we have to assign accounting principles to a leading ledger. And after that, we need to go to OB08. OB08. Then we need to update the currency exchange rate. Currency exchange rate on that particular day. That is, for example, I am taking USD, INR to USD. Exchange type, for this exchange type, we need to create some rates. I think there are three types of exchange rates. One is bank buying rate, that is denoted by G, and it is a standard one. And it is applicable. It is used when we purchase goods from a foreign vendor. And second is bank selling rate. It is denoted by B. It is also a standard one, and it is used when we sold goods to foreign customer. And third one is average rate. And it is denoted by M. Well, it is calculated on average basis by taking total number of days, number of days in that particular month. And after configuring this, we need to create some GL accounts. After that, we need to create some GL accounts regarding this. Is realized loss account, and it is created under other expenses, and it is a P&L account. Second one is realized gain. Gain account. And it is created under other income, and it is also a P&L account. Third one is balance sheet adjustment account. It is created under current liabilities, and it is a balance sheet account. All these GLs are automatic GL accounts. When we create these GL accounts, FS00, we need to use post automatically option. Mandatorily. And after that, we need to assign these GLs ADF code, that is account determination. So it is clear for you all up to this, and the month ending date, you need to do foreign currency revaluation code. It's FHGL underscore FC underscore VAL. And for better understanding, I'm taking one example. Regarding this. Suppose we purchased goods from a foreign vendor. On today, I am taking today's date, that is 6th March 2023. We purchased goods worth is $100. I am taking USD, 100 USD on 6th March 2023. And before that, I forgot to tell one thing about this foreign currency revaluation is only applicable to open items. We purchased goods worth $100 from a foreign vendor on 6 March 2023, and today's dollar rate is Exam. I am assuming rupees 75 it is. Until March 31st, is still lying in open item. Here we need to do foreign currency revaluation, because on that day dollar rate keeps on fluctuating every day. So when we purchase goods on 6th March 2023, the dollar rate is rupees 75, but at the month ending date on 31st March, the dollar rate is increased to rupees 80. Here 5 rupees is increased. So for showing the correct value of books of accounts, we need to do foreign currency revaluation here. In this T code, actually we do foreign currency revaluation in SAP. And when we do foreign currency revaluation in this T code, on 31st March, when we do foreign currency revaluation on 31st March, we get an entry like this. We get an entry. Actually it is increased to rupees 80. So 100 into the difference amount is rupees 500, and it is a realized loss because when we purchase the goods at on the 6th March, the dollar rate is 75, but on 31st March it is still in a open item. So we need to do foreign currency revaluation on 31st March. So the difference amount is transferred to realized loss account because it is increased. It is 100 into 500, and again we created to balance sheet adjustment account. Account 500. Actually on report, only for reporting purpose. Only for reporting purpose. We are doing a foreign currency revaluation on that particular date. Foreign currency revaluation. On that particular date. And again 1st April, the entry will be reversed. Above entry will be reversed or books of accounts automatically, because we are assigning these all GL accounts in KDF code, that is account determination. So after we execute the foreign currency revaluation in this T code, this entry is automatically posted in on 31st March, and again on 1st April the entry will be reversed because it is only for reporting purpose. We are doing a foreign currency revaluation on that particular date for showing the correct value of books of accounts. So the entry will be on 1st April. that is balance sheet adjustment account data. Account data 500 and realized loss account. And here there is no there are no changes in the books of accounts because the entry is reversed now. So on 31st it is SAP is posted entry like this, and again on the next day the SAP made a reversal entry, that is balance sheet adjustment account data to realized loss account. So there will be no changes in the books of accounts. And I am taking another example. I am just copying this and here I am pasting it. And here on 6th March I am taking rupees 80, and here I am taking 31st March, that is 75. Here when we purchase goods on 6th March 2023, the dollar rate is actually is rupees 80, but on 31st March the dollar rate is decreased to rupees 75. Is it? So in this case it will be realized again. And here I need to tell one thing. We need to enter a first. We need to and enter a entry in FB60. And before posting a FB60 in US dollars, USD, because it is a foreign transaction, while posting a transaction in FB60, instead of taking INR, we are taking USD. And before entering a transaction in FB60, we need to choose the option, that is a foreign exchange rate in, that is KR document, T code, that is I think for document types the T code in SAP is OBA7. And before posting a transaction in FB60, it is mandatorily choose to choose the foreign exchange rate in KR document. Here I already mentioned for bank selling rate, bank buying rate, it is G. And here we need to give the G in that particular field. We need to give G in that particular field. And here it is the second case, and here it is a realized gain now, so it is decreased to rupees 75. The difference amount should be transferred to balance sheet adjustment account. Account data 500, the same amount, and here it is realized gain. $500, on the same on the next day, that is 1st April. Again, entry will be reversed in SAP. Is realized gain account data. Balance sheet adjustment account. 500. So here it is, and in your books of accounts, there will be no change, because on 31st March we made a SAP automatically posted this entry, and again the next day on 1st April the reversal entry is posted. So there will be no changes in the books of accounts. Generally, foreign currency revaluation is a month-ending activity, and it is to be done on only on a particular for a reporting purpose. The month-ending date, because currency fluctuations are actually currency rates keeps on fluctuating every day. So to show the correct books of accounts, we need to do foreign currency revaluation at every month last date. So that's why we are doing a foreign currency revaluation on last day of the month. I think it is clear for you all. Today I want to give a brief introduction about foreign currency revaluation. I think it is clear for you all. I think I have done my part on regarding this. Thank you so much.
Yeah, nice presentation, Praveen Kumar.
Yeah, thank you, sir. Thank you.
Good explanation.
Yeah. Who is next? Is there anyone going to give a presentation?